I'm Mel Schaefer. Thank you for joining us. My next guest is the Wolf of All Street, Scott Melker. Scott's a leading voice in Bitcoin and crypto, the author of the Wolf Den newsletter, and host of the popular The Wolf of All Streets podcast. Thank you for joining us, Scott.
Thank you so much for having me.
So to get right into it, Bitcoin's trading, or was trading, at over $93,000 already today, and it's been absolutely skyrocketing, especially since Donald Trump was elected, because he's become pro-crypto. So he's been really bullish for the crypto sector in terms of price action, but is it bullish for crypto, like fundamentally, considering why it was created?
It's an interesting question. So I think that Bitcoin was created obviously as an answer to government inefficiency, to money printing, to corruption, and all of those things. So there is some irony to Bitcoiners and crypto enthusiasts cheering for government adoption, basically, of the asset class. That said, at this point, if Bitcoin is going to continue to become a more legitimate asset class, be a ticker right next to all of the stocks and Forex on CNBC and Fox Business, then obviously that's going to require institutional adoption, state level adoption, sovereign wealth funds, all of the things that would have to come with any legitimized asset. So I think that this is exceptionally bullish for the industry. For Bitcoin itself, I don't think the election should have mattered very much. I'm not saying that that wasn't a major catalyst here. Because if you buy Bitcoin as a hedge against money printing and government inefficiency, then many would point to the Harris administration as being more likely to print a lot of money and be more inefficient. So I think the long-term case for Bitcoin was very good regardless. The rest of the industry, though, certainly anyone trying to build anything in crypto in the United States, the Trump administration likely to be much more favorable for them after this period of regulation by enforcement and crackdowns by the government.
So, well, institutions have been holding Bitcoin already for almost a year, and Ethereum ETFs are now live. How much then, considering all of this government stuff and the SEC approving these ETFs, to what extent do institutions now control Bitcoin?
I don't think they control it at all. I think that's sort of a nonsensical narrative. I always see people saying, well, now BlackRock owns X percentage of the supply of Bitcoin. No, they don't. The customers who buy a BlackRock ETF own X percentage of the supply of Bitcoin. BlackRock simply buys and sells Bitcoin based on how many people buy and sell those ETFs. And that's been primarily retail. So the control of institutions, I think, is a nonsensical narrative. And I think that what we've seen from Bitcoin price historically, nothing's really changed here. And I think it's moved by the huge whales in retail who trade it on a day-to-day basis. Interestingly, with the election and Fed policy and all of the things we've talked about over the years, even COVID and Evergrande and Chinese stimulus, if you look at a chart of Bitcoin and the crypto market on any 4-year period, it's a repeating cycle that is repeating once again. I could have told you, and did very loudly in March and April when Bitcoin made a new all-time high. I said, listen, if you look at the cycle, if you look at the Bitcoin halving that's coming in April, we're going to have 6 months of really boring, choppy downside price action in October and November. We should break out like we have every single 4 years. Happened in 2016, happened in 2020. Now it's happening in 2024. Could have literally fallen on your head, been in a coma, had amnesia, woken up, ignored everything we've discussed in the news, and Bitcoin price would be exactly where it is today based on that chart.
So that brings me to my next question. Considering what analysts have been calling for in terms of Bitcoin's price, and I know that you're an expert and you're watching all the news and you're also on the charts using technical analysis. With all of that considered, where do you see Bitcoin heading into the end of this year and into next year?
Well, I was pretty vocal about we'd get close to 100,000 by the end of the year argument. And frankly, I'll take 93,000 as a win, even if that ends up being the top by the end of the year. I don't think it is. But I think 100,000, is a rounding error at this point based on where price is. It's less than 10% away from the current price. And we've seen Bitcoin do 10% in a day. So I think, and options traders are positioning very heavily for the 100,000 expiry for December contracts. So I think that the market is expecting that likely to happen. This year, low 100,000, 105, somewhere like that. But if we really get a true cycle as we have in the past, I think Bitcoin's easily headed to $150,000 in 2025, which is very conservative, by the way, based on percentage price moves in previous cycles. But I would not be at all surprised to see it in the 220s, 230s, up to 250. Beyond that, also wouldn't surprise me, but I don't want to sound like the crazy person on TV screaming about my beloved asset going to $1 million. So we won't do that. But if you look at past cycles, when Bitcoin breaks an all-time high, it usually does at least a 3-4x from there, right? And so that was at 75,000. Just doing the math, if we even triple from there, obviously, we're into those low 200s.
So Bitcoin is up it's like 30%, or maybe it's more than 30% now, just over, I think, since the election, so over a week or so. But yesterday on your podcast, you were talking about how people lost money, even though Bitcoin has gone up so much. Can you talk a bit about that?
The power of leverage. The answer is because a lot of people who drive Bitcoin price, or certainly who bet on it, are speculators, and they do so with heavy leverage trading on perpetual swap markets, usually foreign perpetual swap markets, obviously, because those aren't necessarily legal in the United States. But we had the largest daily candle by price, not by percentage, 2 days ago, basically an $8,500 spread from open to close. And on that candle, obviously, within that day's trading time, you saw moves, up 5%, down 5%, up 8%, down 8%. And what happened is that anyone trading with leverage, either long or short, ended up either losing their money or straight up getting liquidated. And there was about $1 billion of liquidations on that day. And if you dug in, it was almost as much liquidation of long positions as short. So imagine that. You have the day that Bitcoin has made its largest upside move in history, but because of the volatility within that day, people were using such high leverage that they got stopped out or liquidated on those 5 or 6 or 7% moves within the day. And so it just really is a cautionary tale not to use leverage, especially on a high volatility asset like this. People use leverage on altcoins. I think they're literally insane. That's like leverage play on leverage Bitcoin. And so I think it just tells you that all you need to do to make money in this market is literally hold Bitcoin and be patient.
So I want to shift now and ask your opinion about Bitcoin and gold. Peter Schiff was on another one of our recent shows, not this one, but he called Bitcoin fool's gold and said there's basically no use case for Bitcoin. What comparison can you make between those two asset classes, and do you agree with him or disagree with him?
I love Peter. I've had him on my show a number of times. I had drinks with him in Puerto Rico a few months ago. And I think, largely at this point, he's just baiting the Bitcoin community and having a good time getting clicks at our expense. There's endless debate as to the relationship between Bitcoin and gold. I can tell you that today is a perfect day if you have asked that question to me, because the Bitcoin gold ratio that many gold bugs have looked at as a metric for gold outperforming over the past 6 months, Bitcoin now up on the Bitcoin gold ratio on the year and all time, last time I checked. So it's a chart that only goes up and to the right with small stops. As far as price, Bitcoin has wildly outperformed gold since it was invented. There have obviously been periods where it's down like any chart, but as I said, right now at historic levels. And that was not the case just a few weeks ago. It shows how fast Bitcoin can move when it really does. And that's even in the midst of gold effectively making all-time highs. Now, I don't think that Bitcoin trades like gold. I don't think that Bitcoin trades like stocks. I've long made the argument that Bitcoin is an idiosyncratic asset you need to have in your portfolio, regardless of your feelings about it, because it has a chance to act in an uncorrelated manner. When everything goes up, sometimes it goes down. And as bad as that sounds, that's actually good for your Sharpe ratio and for your portfolio. But certainly when other things are going down and Bitcoin can go up 10 or 20% in a day, that's exceptional for your portfolio. But so as far as price, I don't think Bitcoin trades like anything else, but it does have some of the properties of a digital gold. It just has superior properties in every way, shape, or form. Try to, carrying your gold across the border when you're escaping your country. Try sending someone a $7 payment in gold for some small service that you had them do. Bitcoin is exponentially better as far as being divisible, portable, all the qualities that you would want in your money. And most importantly, it's deflationary.
And so to wrap up, you're heading to New York next week to talk about Bitcoin algorithm by Art Public. You said maybe with some really tall twins. Can you tell us about this product and its key features?
Sure. So Arch Public is a company that I've worked with for quite a while. Their initial products were algorithms for trading stocks, and the performance has just been absolutely exceptional, back tested for years, something that I use and I deeply believe in. But at the core ethos of their company, they're Bitcoiners. Tillman Holloway, who founded it, was a very early Bitcoin miner. And what they have done and sort of proposed with time is that you take the profits from those trades that you've made in the stock market and buy Bitcoin at the end of the day. So you're effectively dollar cost averaging into Bitcoin with your profits. So that was one ethos, but I pushed them and we kind of collectively decided a better way to move forward would simply to be to follow the Michael Saylor strategy that everyone should be using, which is to just continually dollar cost average into Bitcoin. So they've created an algorithm that basically based on how much Bitcoin you want to buy and over what period of time and how often you want to make those purchases at the lowest possible fees, it finds the best price during those time periods to buy Bitcoin. So you may dollar cost average and buy every Monday at 9 a.m., but obviously the price may have been better on Sunday or Friday. So this is effectively a way to dollar cost average over time, finding those 1%, 2% inefficiencies when you get the dips. So over time, as you add to your position, you've bought a lot more Bitcoin at a lot cheaper price, basically. And that's something that they're running with Gemini as the exchange that they're launching the product with, hence the allusion to the Winklevoss brothers. Gemini is getting fully behind this as part of their campaign because everybody in Bitcoin knows that you should simply dollar cost average into Bitcoin and hold. It doesn't have a selling algorithm, right? It has a accumulating a position on the dips at a better price algorithm. And so if you believe in dollar cost averaging, and that's something that you've been doing or plan to do with Bitcoin, this will just continually get you a better price, which can be very, very impactful over time.
That's awesome. Well, thanks so much for joining us, Scott. I hope to have you back again.
Thank you, Mel.